Hello everyone, my name is Jimmy. In this video, I'm going to talk about Coinbase, a crypto trading platform to be public offer at Nasdaq on the 14th of April this month. Cryptocurrency is the most discussed topic after EV during the past few months. It is because a lot of organizations are start to use crypto as part of their investment. For example, Tesla, PayPal, and all these companies are now taking cryptocurrency very seriously as part of their company asset. The reason why we need to concern about Coinbase listing is because it is the first of its kind to be listed at Nasdaq. So whatever that is going on from this point onward will determine how the market will move and how investors will view cryptocurrency for the futures. Coinbase is a cryptocurrency trading platform. It has 43 million of verified users and 2.8 million of monthly transacting users. The company makes money through brokerage fee, very similar to our trading platform for stocks and shares. From the financials that disclose to SEC, Coinbase makes about 1.14 billion in 2020 compared to 482 million in 2019. So that's a significant 236% increase over the year. On the net income, Coinbase made 409 million in 2020 compared to a loss of 45 million in 2019. So this is the year which Coinbase turned profitable. The indicative price for this direct public offer is $343 per share. In terms of price per earning ratio, it is more than 300 times. That means this company will take 300 years earning to make up the current price. Compare this with Ant Finance with a PE of 100 times last year. Coinbase is 3 times more expensive than Ant Finance. That means Coinbase will be close to its 100 billion market cap by the time it's TPO. Will I be investing in Coinbase? Unlikely. Now with its PE of more than 300 times, it's basically overvalued. For a trading platform, the company makes its money through brokerage fee. And other than that, there is no real value for the company itself. With a market cap of 100 billions by the time it's public offer, that means that the upside is pretty much limited. So that is one of the major considerations that I would not invest in Coinbase. Number two is this is the first time that the company turning from loss to profitable in the year 2020. So in 2020, what happened was that Bitcoins has risen very quickly, and as a result of that, people trade Bitcoins and the company makes commissions, brokerage fee through these transactions, and therefore they have this huge revenue. Now going forward, would Bitcoin will continue to go up or come down? We do not know, but what we see, or rather what I see, is that there is, you are not going to have this kind of repeated volume of transactions going forward year after year. Unless other coin has come into play, then the company itself will make more of those brokerage fee as it moves forward. So 2020 is an exceptional year, and personally I do not foresee this will repeat again in the coming years. Lastly, which is probably the most important, is that it is very difficult for me to put a valuation to this company. As what we have witnessed in the failed IPO like WeWork, the initial valuation was really high, and then when things turn to sour, you can see that valuation has adjusted to a very low value. So in terms of Coinbase, you know, right now the Wall Street people are putting a very high value on this DPO, and personally I just don't feel that that's the right price to pay for it, no matter how I liked the platform itself. This is my very short review on Coinbase. If you like this video, please give me a like and share it with your friends. Else, you can write your comments below. Thank you. You have a nice day.